Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities set to extend 6-day winning streak with consolidation kick in. That remains to be seen. Bank Nifty weekly expiry of course will be in focus. But the key question that you might want to ask, what's next for Indian equities after scaling the record high levels? Nifty clearly seems to be in the blue sky territory. Any resistance is imaginary, that needs to be seen. Well, we also need to talk about HDFC Bank. Has that really bottomed out is the question that we've been asking for multiple sessions by now. Delivery volume of over 2,600 crore witnessed in HDFC Bank on Tuesday. One may ask who bought HDFC Bank, whether it's FIIs or DIIs. Will one day wonder, or is it sustainable traction that we're witnessing in HDFC Bank? Let's talk about the setup right now. Nifty PCR ratio has declined in by 1.24% as against 1.25 levels in the previous session. FII and DII data suggest at least FII have sold in equities to an extent of 1,335 odd crore, and DII on the other side have been purchasing equities to an extent of 1,491 odd crore. That's the trend that we're picking up when it comes to FII. Trade setup data, GIFT Nifty indicates a flat start coming in for Nifty. Whether the momentum will be built up or not, that's something that we need to see. While US stocks overnight closed in lower as Nvidia weighed in ahead of the earnings. The shares of the chip designer tumbled by more than 4%, its biggest daily percentage fall since October 17. Talk about Asian shares. Well, they've eased in early deals as early rate cut bets fizzle out. Focus now turns on to Fed minutes, which is going to be released in today. Well, China stocks also are trading in mixed in early trading, a day after the biggest ever reduction in the nation's benchmark mortgage rate. Authorities stepped up efforts to prop up the struggling property markets. Of course, these are the cues that we need to work with. What remains in F&O ban, or rather has been added. Interesting addition there, Balrampur Chini. There was an ethanol related news there. We saw sugar stocks quite being in action in yesterday's trade. GMR Airport Infra 2 has made it to the list. Apart from that, what has been retained is Zee Entertainment. There is a list out there, or rather stocks and news that you need to address in for Zee Entertainment. Sale also remains in that list. What comes out of the ban, interesting one there is Ashok Leyland and Aditya Birla Fashion and Retail. But that's that. We have Rajesh Palviya with us from Axis Direct, who's going to take us through the top strategies and the recommendation for the day. Morning there.
Good morning, Nickey.
Right. What's the trade setup looking like? It's Bank Nifty expiry today, and also do you think any resistance is only imaginary for a markets like this? Clearly, there is a blue sky scenario which has been painted thus far. 6-day winning streak. What's next?
So market is at all-time high. Nifty is on a blue sky territory. I think there is no stoppage at this moment. We can see further more extension of this rally, 22,300 to 22,400. We can see in the current week itself for Nifty, as most of the put writers are now aggressive at 22,100 strikes. So that level is likely to act as a good support area. I think if you open about 22,200, then possibly short covering, another round of short covering we can see in the Nifty. So to play this upward momentum, one can look to buy 22,200 at the money call option that was closed at around 111. So that's the call option one can look to buy. We are projecting target of 170 to 180 for this call option. Keep your stop loss at around 75. Bank Nifty is almost close near to the major call concentration area of 46,200. If at all 47,200. If at all Bank Nifty crosses and holds above 47,200 on spot, then possibly another round of short covering we can see in Bank Nifty also, and then it may scale up to the 47,600 to 47,800 also in the continuation of this trend. So keep your stop loss at 46,800 to hold a long position in Bank Nifty also.
All right, that's the level that we're looking at. 22,200 mark remains to be seen if that's the fresh record highs that we're looking at. We're just going to confirm that in just a jiffy, but 0.1% nearing to that level. It is a flat start of sorts for the markets. But of course, with a bit of positive momentum, just the way we were anticipating for the markets. Bank Nifty also is gaining fair bit of traction there. 0.3% clocked in for Bank Nifty. And if we talk about the advances and the declines, clearly the market breadth seems to be skewed in a big way in the favor of advances. Mid-cap index, that also is participating or showing fair bit of traction there. 0.4% nearing to that level. And small cap index, a bit of outperformance coming on that one, 0.5% captured in on this one. Let's pull up HDFC Bank, because that's the one that we need to watch out for. PSU Bank, of course, is showing fair bit of resilience too. 0.75% clocked in on PSU Bank, but a bit of rather flat start with negative buyers for HDFC Bank. 0.2% lost in actually on this one in early deals. Let's talk about the top gainers and the top losers that we have. Hindalco is the one which is clearly an interesting one. Subsidiary Novelis has filed for an IPO. So if that's the one that we're looking at, there we go. Hindalco is the top gainer of the day. BPCL and JSW Steel, of course, a bit of traction also building in for the metal names. Tata Steel, M&M and Grasim. These are some of the other top gainers that we have. In terms of the top losers, we're looking at Zee Entertainment. Won't be surprised with that. We need to also pull up that. Hero MotoCorp, Infosys and TCS. Well, these are some of the top losers that we have. Tech Mahindra, Apollo and Power Grid. Well, other top losers that we have. Let's also pull up Britannia, Nestle India and HCL Tech. Of course, it's a bunch of IT names there. Let's pull up Zee Entertainment Enterprises and see what's the momentum building up on this one. There's a bit of development which has already taken up, and Nifty is at a fresh all-time high level that we're looking at. But Rajesh, I'm going to come in first for Hindalco. I'll read in the development of what we are looking at for Hindalco. Of course, a bit of pressure which was witnessed in, but the US subsidiary Novelis has filed in for an IPO with Securities and Exchange Commission. The shares are going to be offered in by the sole shareholders AV Mineral Netherlands, and Kotak at least anticipates Novelis not to generate any kind of free cash flow between FY24 to 28. Projection based on estimates of the capex per se that the company has provided for the next 2-3 years. Rajesh, come in on this one. What do you make out of it?
So there was a bearish gap in Hindalco, but today there is a gap up opening, but still stock is struggling to cross its 535, 539 kind of level. That is the major challenging zone at this moment for Hindalco. So 539 has to cross on a closing basis. Then we may see some unwinding trade on the short side, and then possibly some uptick we can see on the in the stock prices. At this moment, we believe that until the stock not crosses above 539, 540 zone, some consolidation is likely to be there in the range of 515 to 540. This could be the possible range we can see for some time. On the breakout above 540, possible target on the higher side we can see towards 565. So at this moment, still the structure is on the weak side. So those who are already in the long side of trade, they can keep their restricted stop loss at around 512 to hold their long position.
Nifty is at a fresh all-time high level. What do you make out of it? What's next for the markets? Of course, it's a flat start with a bit of positive bias. But what's the strategy going forward, Rajesh?
I think one should trail their stop loss at 22,100 on Nifty spot to ride these really short covering action is clearly visible on the screen. Though there could be some volatility ahead of this weekly expiry for Bank Nifty as well as for Nifty. But looking at the overall structure, we believe that this momentum can continue, and possible target on the higher side 22,300 to 400 in very short period of time for Nifty. So one should trail their stop loss at 22,100 for Nifty spot. Sector which we like at this moment, that is real estate, and DLF is looking very promising. So one can look to buy this stock. Another stock that we like at this moment is from cement space, that is Ambuja Cement. That stock is also trying to give breakout on near-term time frame. So that stocks one can keep on their radar to buy. Possible target on the high side we can see towards 615 to 620. Keep your stop loss at around 578.
Okay, that's the word coming in. Clearly, there is more ground that needs to be covered in, but Hindalco is the top gainer. And do bear in mind the fact that the shares have been under pressure after Novelis has announced a delay in completion and increased capital for Bay Minette project. The shares have fallen as much as 12% since Feb 13th after the Novelis came up with this announcement. So a bit of solace coming in for Hindalco from Novelis. 2.5-3% uptick there in early deals. What I'd want to address in next is Zee Entertainment, where now this report typically is a Bloomberg exclusive report that we've picked up this morning. SEBI has found a hole of more than $240 million in the accounts of Zee Entertainment. This comes within a less than a month kind of a development after its merger with Sony collapsed. Also, SEBI has found in $241 million may have been diverted, and this is roughly 10 times more than initially estimated by SEBI. So not a good development. 10% lost on Zee Entertainment. The losses are a bit huge out there for Zee Entertainment, and the amount is yet not final. This may change after SEBI reviews or gets responses from the company. But right now, damage has been done. 10% clocked in or lost in on Zee Entertainment. Do bear in mind the fact that this is an FNO banned stock right now, and hence you're seeing the losses being capped at 10%. Had it been otherwise, the losses would have been way huge than what you're looking at. Swan Energy, where the QIP price has already been declared and intimated on the exchanges, but Union Bank of India too, where the committee of directors have approved in the fundraising plan of 3,000 crore with a floor price of 142.78 per equity share. Right now, we aren't really seeing a fair bit of traction coming in on Union Bank, but that's a bit of development that we're picking up. Zee Entertainment, Rajesh, 10% lost in after 6% gains that we saw in early deals for Zee Entertainment. What do you make out of it?
Very difficult to trade this stock in these kind of news flows, which is coming on day basis. One day uptake, one day downtake, reacting to the news very much. So on a technical front, 205, 210 are the critical level, and that again acted as a supply zone for the stock. In the previous session, almost stock tried to penetrate those level, but again this news dragged the stock on the lower side. On the downside, the major support area is at around 160, 155 zone. So if it breaks below 155, then there is another round of supply pressure we can see in the stock on the lower side also. So 155 is the crucial level in the decline. 205 is the major supply zone on the higher side. So I think till this news flows not settle down, it may remain in this range, and then final outcome of those news flow will decide the major direction for the stock. So 155, 205 is the range for the stock, and we believe this may remain for some more time in this range only till the news flows not settle down at certain level.
All right, your top recommendation for the day, Rajesh?
So I think DLF, as I mentioned, that stock one can keep on their radar. That stock is looking promising, and we believe that DLF can scale up to the level of 905 to 910. Keep your stop loss at 960. Another stock is Bharat Electronics. That stock is also on a verge of giving breakout of its previous swing high. Looking at the overall structure, we believe that this stock can continue furthermore upside. 205 is the target on the higher side. Keep your stop loss at around 187. And the third stock is from automobile space, that is Eicher Motor. After opening, there is a recovery is taking place in the stock, though there was some profit taking was happening, but still stock is holding the ground at around 20-day moving average. Looking at the overall structure, we believe that some short covering action we can witness in during the day for Eicher Motor. So one can look to buy this stock also with stop loss of 3,800, upside target 3,952 of 4,000 for Aishwarya.
Right, those are the recommendations that we have for you early this morning. Clearly, Rajesh, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us.
Okay, thank you.
Right, clearly it's a good day for the market, isn't it? We couldn't have asked for more, or rather, let's just say, it could be a little more greedy and look at more gains coming in for the market. Nifty opens in at all-time high levels, Sensex is flat. And if you look at the stock-specific action, Hindalco and Zee Entertainment, the two bets that we've picked up this morning are the ones that are buzzing in trade today. But let's now cut across to the fundamental side of the story. Aishvarya Dadheech, who's the founder and CIO at Fident Asset Management, joins us. Morning there.
Morning, good morning to all the viewers.
It's a good day rather to have this conversation because it's a record high level coming in for the markets. Of course, 6-day winning streak, which has now got extended to the 7th one. Any kind of resistance seems to be imaginary from here on. Now going forward, what's the next big trigger that you're looking at for the markets? B, how sustainable do you think this rally is?
So if you look at, obviously we are at all-time high as we speak, and it's a good time. But what we see for this calendar year so far, the two big events which has impacted the market. Obviously, first was the quarterly results which went by, and we expect them to be much better than what the street was expecting. We saw Nifty 50, in consortium saw a PAT growth of almost 17%. I think the whole trajectory of earning growth for the last 3 quarters of this financial year has been very robust. And that is what is supporting market so far. So if you look at when we are more or less done with the quarterly season and Nifty is almost up 3.5% since then. So that is the support which market is getting after the numbers which we witnessed. And that is in spite of what we witnessed on the Fed outcome. The more about the inflation number that we saw in US and the commentary, that possibly the rate cut in March, April is more or less out. Possibly even in the month of June, the probability is not very high, and it's more in watch and wait and watch mode as of now. So the whole market movement has happened in spite of the adverse, I would say, the risk of sentiment of the Fed side. Also, apart from what we witnessed, that the supply side issues because of this Red Sea are ongoing. And market is just keeping all of this thing at the back venture and enjoying those things. And one more important thing is, if you look at this calendar year so far, the month of January and February, we have seen that market participants, especially FIs, has been selling India. So not a very big amount, but there has been a pressure of almost close to $4 billion of outflow we have witnessed in this 1.5 month of this calendar year 2024. So in spite of all that, we are rejoicing. It's just in expectations of the earning momentum, the expectations of India's story, the expectation of strong macroeconomic indicators, and obviously the most important outcome, which is around the corner, is election. And what we understand at Fident is possibly the quantum of excitement around mid and small cap by the retail investors before election probably will continue, and we won't be surprised to see market touching new highs, before elections, to settle the excitement or the not leave about the FOMO feeling among retail investors. So interesting times is what we understand as of now.
Sure. So if results weren't really better than what you were hoping for, we've seen still that rather market shrugging that off and rather capturing in that uptrend that we are witnessing right now. Going forward, do you expect more steam to this rally? Of course, pre-election rally is something that people have already factored in. Do you belong to the same camp? If yes, what kind of upside are you anticipating, and what are the themes essentially, or rather 3 picks that you're looking at ahead of this?
So if we look at, obviously we have very little time left for the election, and won't be very, I would say, wise to say how market much will move before the election. I think we will see the dates very soon, and possibly before the results outcome. I think it's best 3 to 3.5 months kind of a time frame. But as I said earlier, I believe because of the excitement of the retail investor, we can see market going up anywhere between 5%, 10% across the different market, broader market, as well as the large caps. We also expect, that once we saw some data from US, even this FI, intensity of selling might taper off, given the whole narrative around India, which is building up. So I think market will be strong in the coming months. But when you look at from what to invest and where to invest, there are just 2 kind of companies are left as of now. One segment of companies, in my understanding, are the businesses or the sectors where valuations are far stretched, where we believe that, the narrative or the story is so strong, and where the most of the quantum of money is flowing into. And that segment is possibly, is getting into a high risk zone. Another segment, if you look at, are businesses, which I won't say are fairly valued, but they are more than fairly valued compared to the historical trend. And possibly they are the one which will move more according to the earning expectations or according to the fundamentals of the business. So if any new investors are thinking through, they should be wary about companies which have valuations are very, very high. And not only according to their long-term track record, but also if you compare it to others. So if you look at the segment or the sectors if you speak about, say possibly FMCG is one sector. Well, I won't say that valuations are cheap, but if you look at their last track record of 3 years, 5 years, they're more or less fairly valued, right? But because of those inherent, conditions about the sector, possibly they are not the favorites of the market. Similarly, BFSI is another sector where valuations are not stretched, nowhere fair compared to the historical trend. And we saw a very good set of numbers in the last quarter and even in quarter 2 to 3 quarters which has went by. And even the story going ahead, the narrative going ahead is pretty strong. So those will be the kind of sectors, which we believe would be more, wise to put their monies into. Pharma could be one of the sectors. Chemical sectors could be another one where we believe, obviously that the excitement is missing and we are seeing those early signs of revival happening through. IT is another one of them. So those will be some of the sectors where, we would like to park the money of investors. Last but not the least, we are not writing off PSU as a sector. We believe PSU will continue to do very well. We believe the whole policy continuity, the expenditure of government, the executions of which we are witnessing across the sphere will continue to see the interest coming into the PSU. But the risk reward is not very favorable. That's the only point we are trying to make here. So one has to be very, very selective when one invests into these kind of companies.
All right. Point when taken. Let's also chat about Zee Entertainment. That's something I think we all need to watch out for. We've seen that fair bit of traction building in after the report suggested that, again, there might be a revival one could see between the merger of Sony and Zee. That's one. B, today there were reports suggesting that there's this whole accounting a hole that has been found out by the SEBI, and the amount seems to be much higher, almost 10 times higher than the initial assessment. Of course, the company is yet to respond to that, and that might fluctuate. But fair bit of volatility which has already crept into Zee Entertainment. What's your advice on Zee Entertainment and also media related companies? Something like Network 18 and TV 18 also have been doing well. Disclosures, there's of course it's the group company that we're talking about. But what do you make out of the space right now and Zee Entertainment to be precise?
Obviously this space has been the talk of the town lately. And a lot of these companies have heard or what the market has been hearing about a lot of integrations or mergers and things like that, and which has crept in a lot of volatility into the sector. And particularly if you look at the market data like Zee, which is we believe is a great asset, has seen his share of heightened volatility because of those unfortunate events happening across the sphere. I would not like to comment specifically on any outcomes of which has an adverse impact. But one thing is for sure that a couple of months, I think this volatility will continue to remain high across the media space, including Zee. And one investor should possibly park their money when they have more visibility about the growth part, and obviously the whole dust settles around. So I will not recommend investors to jump on the wagon and try to buy this volatility and try to be a smart investor at this juncture, because a lot of part of the unknown is very high across the media space. And possibly the risk reward is something which one has to be really watchful here. So that's my comment on this particular this particular script and the sector per se.
Oh, how about the Paytm 50% share price top and the trend that we're picking up when it comes to the schemes investing into Paytm? Fair bit of recovery. Actually, now investors or traders who rather think that the bottom is behind or already formed for Paytm, how can they play up this counter? That's one. Do you think that it's a good stock now after the kind of correction that we've seen? March 15th is what we're going to see the final word coming in, whether it can operate beyond that or not. That's one bit of development. The second question to this is Hindalco. A lot of pressure which is built in on Hindalco also, right? Novelis has now come up with a report suggesting that it's going to be filing in an IPO, and that's brought some solace after the kind of pressure that the capex of this downstream company had rather instead inserted on the financial profiles of Hindalco. You think that will make the balance sheet a little more leaner for Hindalco? What's your view both on Paytm as well as Hindalco?
Hindalco was very interesting. If I remember it correctly, they bought Novelis in 2007 and almost 16, 17 years since then. And it was very surprising to see all of a sudden that the news came about Now it is filing for an IPO. I believe, if I'm not mistaken, I think this is primarily offers and majority of this money is coming to the promoter, not much money is going to Novelis per se at the company level. But if I look at the balance sheets, Hindalco is anyway cash rich on standalone basis, close to almost 3,500 to 4,000 crore of cash that they're sitting on. And Novelis is one where they have debt of almost 37,000 crore, a kind of number. So I believe, this is possibly the promoter is excited about the way the US market and the global markets are acting upon, and possibly they believe this is a good time to liquidate their holding, and possibly this money is going to go back to the Novelis holding company. And what I can detect from here is possibly there could be that some money when it flows to Hindalco, we can see some amount of higher dividend payout or things like that. But it doesn't change things a big way. It's sentimentally positive. I believe it's better that the true valuations will be given around. I think they hold 100% of the company, so putting out some money and taking it off is not a bad idea. So I think it's sentimentally positive. I'm not really sure about whether we will see there could be a holding company discount which might creep in. So that is what we have to be watchful about. But I think at promoter level, at the entities thing level, I think this could be a positive from that perspective. So I'm not reading too much into this. If you expect me that whether one should just buy Hindalco on this announcement, possibly it doesn't add up to the story. This is one small positive, which I believe the market will rejoice. Coming back to on your other questions on Paytm, I would rather limit my questions to new age businesses, and we believe at Fident that new age businesses is the area one should now focus on. We believe that a very stern message has passed on to the whole community of those promoters in this segment that Indian investors want businesses to be profitable. They want businesses where your internal IRR, the incremental IRR is positive compared to the cost of money which is there. And we have seen majority of these companies, look at Zomato's, if you look at, when the focus on Nykaa and other companies, has been on trying to see that they get into that flavor. And I believe a lot of the interest of Indian investors will go after this, including retail investors. So we are very positive on all of these new age businesses, and we should not forget, sooner or later we will also see rate cut happening, if not in the middle of this calendar year, possibly toward the later part of this calendar year. That will also help a lot of this, valuation re-rating theme for these businesses to play out. Specifically on Paytm, obviously this is a tussle between the regulator and the company, and it will not be wise to say how the tide will turn. But on valuations, things are very, very attractive, but one has to be very careful about, because if I see historically, whenever there has been tussle with the regulator, things have normally taken longer for it to settle. So for conservative investors, for investors who value risk and reward, I would say there are a lot of many other options in the new age businesses, as we were speaking about, where there is value, and we believe the earning potential is huge going ahead.
All right, sir, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation here with us.
Thank you. Thank you so much.
All right, that's that when it comes to the trade setup, the stocks and news, and the few recommendations that we had both on technical as well as fundamental side. Do bear in mind the fact that today also Paytm is trading higher, almost is locked in that upper circuit limit of 5%. But that's that when it comes to the entire setup that we had. But coming up next is Juniper Hotels. Now, it's an Hyatt-based affiliate company which is knocking your door today with an 1,800 crore of issue, which will open for subscription on Feb 21st, which is today. And of course, the company plans to retire essentially debt. It's also, an asset-owned model, which means an asset-heavy model, because of which the debt is way higher as compared to the asset-light models, and also the other counterpart, Chalet Hotels, which is again an asset-heavy model. EBITDA per room of the company is also highest as compared to that of peers. Occupancy is higher as compared to other peers. So that's fair bit of positive. valuation at this point of time seems to be a little stretched with this one. The company has been loss-making for the last 3 financial years as compared also in the first 6 months of the financial year. Essentially, it is the debt burden and the interest cost payment that they're supposed to, pay in, which is weighing down on the financials. Hopefully, with the IPO, you would see that turnaround taking place sooner or later in the first half of the financial year of the company. But we caught up with the management of the company to know more about how they intend to go about with their deleveraging process. And here is the bite to that conversation. What's your leverage, your debt to EBITDA right now? With this issue, how much it will come down to? And what is the level that you're comfortable with?
Yeah, let me start first. We are raising 1,800 crore rupees of fresh equity. Out of this, 1,500 is earmarked for reducing our debt, and 300 is kept with the company for general purpose, which basically means for growth. We are not short of money to run our company or in any way. So this 1,500 crore rupees of leveraging, at present we have a leverage of about 2,210 crores. Out of this, about 300 crore is promoter loans from our ECB, from our overseas ownership companies. And 1,850 crore rupees, about 1,910 crore rupees is the debt that is sitting out here with the different banks. So out of that 1,900, we will be reducing 1,500. So the company will, going forward, will have 400 crore rupees of debt. And our aim going into the future is to have a leveraging level which is going to be less than 1 times the EBITDA. Going forward, company may leverage up to slightly up to about 2, but that would depend on when the opportunities for new asset acquisitions will come in. So our big picture objective at this moment is to deleverage the company, and where we are now having almost 220 crore rupees of our profits are being deployed to debt service and interest payments. That will also become company's free cash flow going into the future post the IPO.
Okay, so debt to EBITDA, you said your comfort level would be 1, or rather it will come down by 1 post listing. Have I got that right? For FY25 is the number that you suggested?
Absolutely, madam. We are going to be less than 1 in terms of our EBITDA multiple for 25.
Okay, that will be the first half that we're looking at, or the second half?
First half, it will come down to less than 0.7. Okay, and depending on the opportunities that are coming up to us for new asset acquisition, it will depend on that when the new assets are being acquired. That's only when the company would re-leverage. Otherwise, we are quite sitting pretty with this leveraging at low level.
All right, that was the management of the company suggesting of the debt level first to EBITDA, the leverage level coming into 0.7%, 0.7 times to 1 time by the end of the financial year, but might just take a little bit higher, normally 2 times, if it goes about with the acquisition that it has planned. But that's all that we have on this edition of The Trade. With this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the update, stay tuned into moneycontrol.com and Moneycontrol app.